So let's talk trading strategies. I've been asked quite a few times just to sort of divulge where this particular strategy that I trade comes from. And I basically developed this in around about, I think it was September 2024 when I actually started trading it live. I'd been creating it throughout my trading history up until that point. So I'm just going to give you a little bit of background on this. It's been a very interesting journey, is all I can say with this. So I started trading, I think it was, I'm a bit of a timeless being, so I can't really remember the exact month, but I think I started trading in either January or March 2022. And I originally joined, I'd had a little dalliance with gold on 1 minute charts a few years prior to that, didn't like it, thought this game's not for me. Then I got reintroduced to it in 2022. So I joined a company called IM Academy. And within that academy, it was a network marketing company. So I had no interest in like the network marketing side of it. I just wanted to learn how to trade. So I didn't really think anything of it at the time. I initially got offered, so there was multiple different options of what you could learn to trade. And my first mentor, he said to me basically, out of all the options, he thought EMA trading, something called 1362 trading, would probably suit me to get me eased into the market. Now, this 1362 system was developed by a man called Micheal Angel Martin, or he's known as MAM, and amazing trainer. I mean, he was probably one of the reasons why I got into Forex because I did a week's free trial with these guys, and it was his mindset. He wasn't a dickhead. He just said it straight down the line as it was, and I thought, I like you, mate. I like you, so I'm on board. So I started learning 1362 trading. The only issue with it was from the 1 hour, it was on a 1 hour chart, and you had to wait for so long. Trades took so long, and I don't really have a lot of patience. So even from day one, while I was learning this particular method, I would put vertical lines through particular 1 hour candles and drop down to like the 5 minute or 1 minute charts and just look for entry models. And that was how my own strategy started coming about. Now, after that, I'd done the 1362. I had a very high hit rate, actually. I had a 94% win rate on it. But for me, that just wasn't good enough. Nothing's ever good enough for me. So then I went over and learnt smart money, which I'm really, really glad I did because it's given me a good insight into the market. And then throughout the IM Academy experience, it's really interesting because it's a network marketing company. They've got a really good business model. They keep bringing out new shiny objects, which obviously keeps you interested in the markets. And you think, oh, maybe I can make more money over there, or oh, they're having success over there, I'll do that. So you get bounced around quite a few strategies if you don't know how to stay in your own lane. So I learned harmonic scanners, gold scanners, lots of different stuff. And then in 2024, might have been late 23. One or the other, we had a particular part of the company was unlocked to us where we got access to something called an impulse scanner. And this impulse scanner was designed by Brandon Boyd and Dr. Josh Lee. Hat off to those two guys. Micro price action is their thing. And it wasn't so much the scanner I was interested because by this point I'd already started developing. I'd been playing with EMAs for ages. Even though I knew smart money, I was still using EMAs, and I hated higher time frames. I used to use points of interest and stuff, but I'd always drop down to the 5 or 1 minute to place my trades. And my original model with this particular strategy was a 1 minute model. I'm going to show you all models in a minute. When I started learning under Brandon Boyd and Dr. Josh Lee, I started getting really fascinated in micro price action. So that's how all the little candles move, mini breaks of structure, lots of different bits and pieces. And that started enhancing what I'd already started creating with this particular strategy. We call it the TWS strategy. So it's the Wendy strategy, basically. And all it is using three EMAs and a 5 minute chart. That's pretty much it. So how did I get to that point? So what happened? I'm going to share my screen with you. So this is what I used to do and I used to play about with. If you bear with me 1 minute, just going to pause this here for a sec. This meeting recorded. Right, so how this started originally, what would happen is on a 1 hour chart, When I got a cross of the EMAs, like for example, there's a cross of the EMAs here, what I would do is I'd literally grab a vertical line. You could use this as well, guys, on a 1 hour chart, it still works. I would whack it through that candle, and then I would go down to a 5 minute chart, and then I would look for my entry model. And all that is basically waiting for these EMAs to cross back into the right direction and waiting for a decent candle, and then using like what I call a structural stop loss. So for example, on here, where on earth would I have entered on that? I'd have probably taken this candle. So whack a short position on that. We're going on that. Structural stop loss, so previous high, which would be this over here. Previous high on the wick of that candle, and then I would just take a 1 to 2. So it'd be that's what the original model was like. 1 hour, vertical line through, drop down, bang, wait till the EMA is crossed in the right direction on the 5 minute, find a decent candle, structural stop loss, in we go. So that was how it originally started. That was my original 1 hour model. And then what happened was I thought I need to fine tune this. There's probably something else I can do. And I started looking at Brandon and Josh use something down here. You can see this multi-time frame indicator. And they use a really slow moving EMA as well. So this slow moving long EMA, basically, I took that principle and instead of just using a 1 hour chart, I thought if I drop down to the 5 minute, all I want to make sure is all of my price action is underneath that particular long moving EMA from the 1 minute up to the 1 hour. So that's where this MTFTI tool came in really, really handy. They had one of these on the Impulse scanner. So I sort of nicked it off of them basically, but found a version of it on TradingView. So then from that is how I started fine tuning this strategy. So my strategy, and this was the original, not the 1 hour model, but this was the original like 5 minute model. What I was then looking for was everything in alignment. The 1 minute's out at the minute, but this was a moment ago when I was looking at it. So everything in alignment from the 1 minute to the 1 hour. When I'm teaching this, I like people to have the 4 hour and daily in alignment as well, just until they get a hang of it. And then I would wait for the EMA cross. So the EMA cross here. I would put a vertical line through the EMA cross, which would be on that one, and then I would drop to the 1 minute chart. And then on that 1 minute chart, I would do the same thing. I would then be looking for my entry model because I always thought you get quicker trades on the 1 minute chart. So the entry model, this is where it started getting tuned up. So I would then wait for, again, I would literally drop down. That candle would be my entry candle. I would whack a short position on that. I wasn't using structural stop losses on this particular model. Oh, 1 to 2, 1 to 2, 1 to 2. So I was literally, when I developed this model, it was no more than a 10 pip stop loss on the 5 minute when I dropped down to the 1 minute. So really, really tight stop losses. And if you can see there as well, I would go as well. I haven't gone right to the top of this entry candle, but I do have a model where I go to the top of like the candle I've entered on. So you wait for candle close, then you can go on that. But for me with this trade, I would have literally just covered the candle before. So that would have been my quick 1 to 2 on that trade. God, this moves so quick on gold. And as you can see, that I'd have just got that before it had pinged back. So that was my 5 minute dropping down to the 1 minute model. Now, I'm going to come back to you guys for a second. What then happened after that? I ended up on a master's video at the IM Academy, and that's the model I showed. So I showed them my alignment of time frames on the 5 minute. When you get an EMA cross, whack a vertical line for it, drop down to the 1 minute, and then find yourself an entry model. No bigger than 10 pip stop loss. If it's bigger than 10 pip, don't trade it. Simple as that. So that went out on a master's video. And from that master's video, one of the educators, funny enough, ma'am, Micheal Angel Martin, who originally I learned the 1362 trading. This isn't 1362, it's different EMAs. Ma'am contacted me and said, I like the model. I've created an indicator that does that. Would you test it for me? So I said, yep, fine, because that model was running me a 75% success rate. So I thought that's good enough. So I tested the model for him. And I said, yeah, your indicator does the same as my trading strategy, hits about a 75% like success rate. So he said, wonderful, thank you. And then he put that indicator onto his training on the IM Academy. And he said, this is based off Wendy's strategy. So, I think that for me to begin with was the biggest compliment, because if someone's taking your strategy, who's one of your educators, and utilizing it, it must mean there's something in it. So basically, I did that, and then IM Academy sort of fell apart a little bit. And one of my other mentors at that point had said to me he was starting up his own trading platform that was not going to be network marketing. It was literally just going to be trading, three different strategies. That's it. He wanted scalping, smart money, and something particular that he did on there. And he said, would I come and educate for him with your strategy? So I thought, well, yeah. Now, what I didn't want to do, because I don't mind trading on 1 minute charts, however, they can be a bit hairy and you've really got to know what you're looking at. So I thought, instead of teaching the 1 minute model, I could probably just turn this into a 5 minute model. And that's what I'm going to show you now. So let me just pause this again. This meeting. So basically what happened when I joined Sovereign Trader, they were called, is I stopped utilizing the 1 minute model because I tested it and tested it and tested it. Like, this strategy has been battle tested to the max pretty much. So it's had thousands of trades through it. It really has. And I look back through my previous journal, and then like I say, I tested this model just on the 5 minute and thought, how can I simplify this for my traders? And what I found is the majority of trades, actually, they don't finish a lot quicker. You might get 20% of them would finish quicker on the 1 minute, but the rest of them, they just run the same as the 5 minute. So I thought, right, I'll just create a 5 minute model of this. So again, if you can ignore that the 1 minute's out at the minute, it's only because it's popping up here. So my model was time frames aligned if you're early stages learning, 1 minute to the 1 hour if you're advanced on this. And then all we wait for is in the background, I don't know if you can see it, but I've got a Bollinger Band, right? So how I created this was I wanted to find the easiest way to show people price action. So eventually you can get rid of the only EMA you would need is my long running granddaddy black EMA that I've got on there. So it's over a 200 EMA. So it just shows over the last 200 candle formation price action, basically. So I thought, how can I create something, again, visually, where people can get an indication of when a pullback has happened? Because if you think about pullbacks in the market, so if we're selling off with this at the moment, this strategy, first of all, we want price action to pull back in the opposite direction and then go. And the way I look at pullbacks is I look at them like you're pulling back the tension on an elastic band, and then you're going to let it go, and then hopefully price action is going to go in the right direction. And the easiest way for me to do that was to utilize a Bollinger Band, but the Bollinger Band 2, it's the setup, the deviation of 2 on this one, because when price action breaches the Bollinger Band and everything is underneath this 200 EMA, and then you get a crossover of the EMAs. So blue above red means we're in sell mode, red above blue means we're in buy mode. Yeah. So if you get a Bollinger Band pullback followed by a crossover of the EMAs, and then the next decent candle to enter on, which is a good looking candle, you have to decide that yourself. I can give you certain candles that I like the look of, but there are, yeah. So it's one of those things, it's like a personal preference. So it's a pullback, crossover, decent candle, in you go. The 5 minute model is really, really simple. So all we do with this one, we've had the pullback, the crossover, and with the new model, if I've got poxy little candles like this, I will always wait for another pullback into that area and then go, especially if we're around this 200 EMA as well, because it's like a bit of a draw for price. So this would be our candle. And with this, we just cover the 248 top of the candle, and then we take a 1 to 2. So that is the trading model number one. So the 5 minute, basically, you're not in the trade for long. It's a really quick, simple model to follow, and you get quite a few trades throughout the day with it. So that's trade number one. Then over here again, like you can see, the EMAs have virtually crossed back up. You have another pullback through that Bollinger Band, crossover of the EMAs, and then you get another trade over here. So this is the really basic model. Wait for candle close, tight on the top of that candle. Another little 1 to 2. Now we only take a couple of these after the initial cross from the top. So there you go. So we'd have had 4% off of that. This is gold. I don't actually trade gold. Crazy people trade gold. So after the initial cross up here, we'll only take a couple of these before we want price action to settle again, reset with a really deep pullback and then go again. So, because price obviously will only go so far down until it's got to have a deep pullback because of the higher time frames. So that's model number one. I also have, because I have no patience for my trading, I have re-entry models on this as well. So you can utilize the red or the blue EMA with a certain amount of touches on it for re-entries. So the rule is after the initial crossover, you can have up to 4 touches on the red EMA for entry points or 2 on the blue EMA. Personally, I like the blue EMA pullbacks because they're just better. They're a slightly deeper pullback. Tend to be more of a ping on the old elastic band, and they tend to be more successful. The red EMA pullbacks we tend to use more on the JPY pairs. Anything that's not a JPY pair tend to go for the blue pullbacks. But I'm going to come back to you guys again. So that was where this came from. So it originally came from me learning EMA trading from Micheal Angel Martin, then playing about with EMAs and constantly getting told off by my mentors because it wasn't what we were meant to be learning in the academy. But I think you've got to be a creative thinker if you're going to get anywhere in this game. Then it was from Brandon Boyd and Josh Lee learning some micro price action to really look into what candles do, like on the micro level, not the macro level, which was really helpful. And obviously seeing what they did with the impulse scanner and different time frames in alignment. So it's not necessarily trading with trend, it's trading with a different type of alignment, utilizing that 200 EMA. It's as simple as that. So that's where it came from. Then a bit of fine tuning, a lot of testing, a lot of blow-in funded challenges, blow-in funded accounts, trying to get myself into a profitable space. And hey ho, it is a successful strategy that we now teach solely in Inner Edge. So I'm no longer with Sovereign Trader. They're more smart money orientated. So we sort of went in different directions, and I am scalping only now over at Inner Edge with my business partner, Lee Saunders, who trades my strategy very, very successfully. He's full-time trading as well now, and we have a lovely community over there. So the beautiful thing about this is you're probably going to see this strategy in a lot of places because there's a lot of people now. I've given the strategy away to people, sent them all my training, all my educational material, just so they can get it out to the general public. And there's a lot of other people as well that are now making indicators based on this strategy, which again is a lovely thing as far as I'm concerned, because if I've put something out there that people are then utilizing for themselves, it really is a successful strategy. So that is the etymology, I think that's what you call it, of where that strategy came from and how it came to light. I hope you enjoy it. If you want to get involved in trading, and you love scalping, which is short movements in the market on lower time frames because you don't have a lot of patience like me and most of my trading community, then just give us a shout over at Inner Edge. I will put the link in the video underneath in the description somewhere. And if you have any questions, please feel free to ask. What you've got there on that video, though, if you know how to trade, you should be able to take that away and do something with it. So happy trading, guys.